Think you need to be rich to invest? Nope. The truth is, the earlier you start, the easier it gets. In this video, I'm going to break down exactly why investing early is one of the smartest moves you can make, even if you're starting with just $50. We'll cover how time makes a huge difference in your returns, the power of compound interest, it's like magic but real, and the simple steps to get started today. Stick around, because we're going to make investing less intimidating and way more exciting. Let's talk about why starting early is so important when it comes to investing. And the answer is simple. Time. See, when you invest your money, it has the potential to grow. And the earlier you start, the more time your money has to grow. It's like planting a tree. The best time to plant a tree was 20 years ago. The second best time is today. Let me give you an example. Imagine two people, both wanting to retire with $1 million. Person A starts investing $5,000 a year at age 25. Person B waits until they're 35 to start investing, but they have to invest almost $10,000 a year to catch up. That's double the amount just because they waited 10 years. This is the power of compound growth. It's like a snowball effect. The longer you give your investments to grow, the more they make on their own, and over time those gains start to compound on themselves, leading to exponential growth. It's like magic, but it's real, and it's all thanks to the power of time. So, even if you can only invest a small amount right now, don't wait. Time is your greatest asset, and the sooner you start, the better off you'll be in the long run. Trust me, your future self will thank you. Albert Einstein supposedly called compound interest the eighth wonder of the world. And for good reason. It's basically your money making more money, and then that money making even more money. It's like a snowball effect, but instead of snow, it's your wealth growing bigger and bigger. Let's say you invest $1,000 and earn a 7% return. After the first year you've made $70, not bad. But here's where the magic happens. The next year, you're not just earning 7% on your original $1,000, you're earning it on $1,070. And so on, and so on. Over time, even small amounts, invested consistently, can snowball into significant wealth. The longer your money stays invested, the harder it works for you. It's like having a personal money-making machine working for you 24/7, even while you sleep. So, how do you harness the power of compound interest? It's simple. Start early, invest consistently, and be patient. The earlier you start and the more consistent you are, the more time your money has to compound and grow exponentially. One of the biggest myths about investing is that you need a lot of money to get started. That's simply not true. In fact, you can start investing with as little as $50, or even less with some apps. The key is to start small and be consistent. Remember, investing isn't about timing the market perfectly or picking the next hot stock. It's about building a habit of investing regularly, no matter what the market is doing. Think of it like working out. You don't need to spend hours at the gym every day to see results. Just 30 minutes a day, a few times a week, can make a big difference over time. The same goes for investing. Even if you can only invest $50 a month, that's still $600 a year. And over time, that money will start to compound and grow, especially if you're investing in a diversified portfolio of low-cost index funds or ETFs. Chapter 4. Dollar cost averaging, your secret weapon. Ever heard of dollar cost averaging? It's a fancy term for a simple yet powerful investing strategy. Here's how it works. Instead of trying to time the market and invest a lump sum when you think prices are low, you invest a fixed amount of money at regular intervals, regardless of the market conditions. Let's say you decide to invest $100 every month into an S&P 500 index fund. Some months the market might be up and you'll buy fewer shares. Other months the market might be down and you'll buy more shares. Over time, this strategy averages out the cost of your investments, reducing the impact of market volatility. The beauty of dollar cost averaging is that it takes the emotion out of investing. You don't need to stress about timing the market perfectly or worry about short-term fluctuations. You simply invest consistently, month after month, year after year, and let the power of compound interest do its work. Chapter 5, Keep It Simple, Investing for Beginners. Now you might be thinking, okay, but what should I actually invest in? Don't overcomplicate things, especially when you're just starting. A great option for beginners is a low-cost index fund or ETF that tracks a broad market index like the S&P 500. The S&P 500 is a basket of 500 of the largest publicly traded U.S. companies, representing a diversified slice of the stock market. By investing in an S&P 500 index fund, you're essentially buying a tiny piece of all those companies. Index funds are low cost, easy to understand, and have historically delivered solid returns over the long term. They're a great way to get started with investing without needing to pick individual stocks or time the market. Another thing to consider is tax-advantaged accounts, like a Roth IRA or a 401k if your employer offers one. These accounts allow your investments to grow tax-free or tax-deferred, which can significantly boost your returns over time. Chapter 6. Start investing today. Here's the bottom line. The earlier you start investing, the less you have to invest later to reach the same goal. Time and consistency are your secret weapons when it comes to building wealth. Even if it's just $20 a week, start. Your future self will thank you. Like and subscribe for more money tips. Outro, you got this. Look, I get it. Investing can seem intimidating at first, but trust me, it's one of the smartest things you can do for your future. Remember that example of person A and person B? Don't be person B, kicking yourself for not starting sooner. The beauty of investing is that you don't need to be an expert to get started. With a little bit of knowledge and the right tools, anyone can do it. So, what are you waiting for? Open up an investment account today, start small, and watch your money grow.